Okay, let's pull up the Firstsource stock price and see how it's faring right now. It's slipped close to about 2%, so it's reacting adversely to the Q1 earnings, which are flashing on your screen. As of now, it's not yet uploaded on the exchanges. Have you been able to look at it?
No,
on the
exchanges?
It's not yet. It's not on the exchanges as I can see it. We have revenues which have fallen by 5% and profits which have declined by 10%. Sanjiv Goenka, the MD chairman of Firstsource, now joins in. Good afternoon, Mr. Goenka, and thanks so much for joining us and speaking with us again. Can you run us through what the earnings are, one in dollar revenues or in constant currency, what the growth was in Q1, and also what the EBITDA margins are for the quarter?
Yes. Well, if you see, the turnover was at 755 crores, which is 5% above the same quarter last year. The PAT was at 52 crores, 53.2 crores actually, which is 30% above the same period last year. That's a very smart improvement. And if you would recollect, I have always been saying over the last 4 or 5 quarters, our focus is bottom line, not top line at this stage, and that is reflected in these numbers. Our margins are up by 1.3%. That is over and above a 3% improvement in margins last year. So if you look at 5 quarters ago, we are about 4.3% up on margins.
All right. Hi, Mr. Goenka. As you said, we have been seeing a good recovery in your operations per se. But could you give us that figure? What is the exact EBITDA margins, your operating margins?
The exact EBITDA margins are 10.1%.
10.1%. All right.
Has it come down then on a quarter-on-quarter basis? Because in the previous quarter it was...
No, it's gone up.
On a sequential basis as well, Mr. Goenka?
It's on a sequential. No, quarter 4 is typically a high margin and a high revenue quarter for the BPO business.
Right.
So it's not right to compare quarter 4 of last year with quarter 1 of this year.
All right.
But if you look at quarter 1 of last year to quarter 1 of this year, that is the result. I mean, margins are up. And profits are up by 30%.
All right, Mr. Goenka. So on a year-on-year basis, it's looking good, though. With regard to your margins, if it's come closer towards a 10% mark, then I think your guidance for this year with regard to your margins was closer towards a 13.5%. That makes the next 3 quarters quite difficult, I would think, because then you will have to perform close to around 14%. The margins need to go up to around 14.5%. Are you confident that can be achieved?
You know, frankly, I think margins, say for example, for the month of June were much higher than 10%. They were just at around, just marginally under 13%. So this is the nature of the industry. I mean, the first quarter is always a slightly low quarter, and we've also invested for other businesses. We won $36 million of contracts.
Right.
So we've invested in people and seats for those businesses, but the revenues will start flowing in from quarter 3, quarter 4.
So for the rest of the year, what will your margin guidance be? Will you maintain it at around 13.5%? Can we get to that mark, the EBITDA margins?
I think, you know, we are very optimistic that the performance will be very, very good.
All right.
Okay. What was the constant currency growth in the quarter? We have it in rupee terms, but in constant currency, if you could help us with that number?
It's more or less constant.
Okay. And overall for FY15, what's the expectations? I know you've been reiterating the focus is on profitable growth, but can you give us an idea of what the constant currency growth will look like in FY15?
Well, as I said, the contracts that we have won this year is $36 million as of now. The sales pipeline stands at $393 million.
Right.
But I do believe that you would see a decent bottom line growth.
All right, Mr. Goenka, then we are seeing some margin pressure. So I need to ask you this, where exactly did that pressure come from, geographically as well as with regard to your business segments? Where exactly did you see that margin dip? I mean, it's improved on a year-on-year basis, but as you said, you saw an uptick in the month of June, while the other 2 months maybe it was quite subdued. So where exactly are you seeing margin pressure?
No, it's not a margin pressure. We actually are seeing a margin enhancement.
Right.
This is the way the industry operates. This is the way it sort of functions. This quarter is generally a slightly lower quarter than the finishing quarter. And as I said earlier, we've invested for businesses that we have won. So we've not yet seen the revenue, but you've seen the expense of that going in already. So you will start seeing revenues coming in the subsequent quarters.
Okay.
And that is what is reflected, for example, in June. Some revenues have come in, so you've seen the June margins already move up.
Okay. Can you tell us what the growth was in your individual verticals in healthcare, in BFSI, media, as well as telecom?
I think, frankly, BFSI has done very well for us. Healthcare seems to be picking up now. And for us, UK and USA will continue to be equal areas of growth and consolidation. And I think you will see a lot more coming out of both these domains as we move along.
All right, Mr. Goenka, thanks so much for stopping by this afternoon. All the best going ahead. You've shown a good improvement on a year-on-year basis, as you indicated, and maybe in fact quarter one is quite a weak quarter. That stock is under a tad bit of pressure, but just keep in mind it's been a big runner just in the last 1 year. The stock was hovering around that 15 rupee mark, or it's seen a big 100% increase. So maybe the first quarter is quite subdued, but as Mr. Goenka said, that going ahead is likely to look better. But the markets as well should come up for you. The Nifty was holding with a cut of around 25 points approximately. The Sensex is down 100 points. So it'll be a battle for around that 7,700 odd mark for today's trading session. The bulls will really be looking to end the day about that 7,700 mark. Well, let's slip into a short break. When you come back, we'll keep talking to some mid-cap companies. Stay tuned.